Hi, I'm Nick Nassad, and welcome to another edition of CMS Forex News. Today is June 10th, 2008. In the UK, the number of residential property agents and surveyors saying prices fell exceeded those reporting gains by 92.9%, a slight improvement from last month. Banks are approving less home loans, putting a dent in demand, and an uncertain outlook in the economy, with the prospect of higher interest rates, is making potential homeowners wary. Housing prices are falling as a result, though this indicator measures the breadth of declines and not necessarily the amount and depth of the housing prices. In a second release, the BRC Retail Sales Monitor showed sales increasing 1.9% in May compared to the same time last year. The rebound comes as a result of better weather and continuing widespread discounts. In a third report, industrial output grew 0.2% and manufacturing output was up 0.1% in the UK, slightly better than the flat reading forecast, and also an improvement on last month's negative numbers. Gas, electricity, and water output had the strongest yearly increase of 7.7% since January of 2001. Manufacturing output was lifted by strong demand for motor vehicles and aircraft production. The markets latched onto the negative news from the UK housing, and the pound-dollar pair had a strong 200 pip move down overnight. It is now trading near 1.9540, its level prior to Friday's US employment report, which weakened the dollar. Dollar strength also coincided with remarks by Bernanke late on Monday that inflation expectations had to be kept in check, as an unanchoring of these expectations would be destabilizing from growth as well as inflation. The euro-dollar pair continued its fall this week and is now 350 pips off its high set on Monday. Bernanke's comments implied that economic risks have faded somewhat, and Treasury Secretary Paulson said strong economic fundamentals will translate into dollar strength. Traders boosted speculation that from here on out, inflation will be a bigger concern to these policymakers than economic growth. The Bank of Canada surprised the markets and held rates at 3%. Expectations had been for a reduction in the rate to 2.75%, as recent GDP figures showed a slowing economy. Policy members are concerned about inflation, pushed up by energy costs, and it has now joined the US and the UK banks in pausing on further rate cuts as they try and clamp down on inflation. The US dollar-Canadian dollar pair fell 100 pips following the Bank of Canada announcement, where it found support near 1.02. The greenback has been strengthening on the loonie over the last 9 trading sessions as the markets had priced in a rate cut for the Bank of Canada. In the US, trade balance data showed a deficit widening to $60.9 billion for April, as surging oil prices pushed imports to a new record, overshadowing a big gain in exports as a result of a weaker dollar. In Canada, the trade surplus shrank to 5.1 billion Canadian dollars. Exports were up as prices for oil and natural gas, two of Canada's main exports, jumped. Imports rose 2.6%, also pushed up by energy products. The dollar-yen pair managed to break above its resistance at 105.25 overnight, and it climbed to the 107.25 level by 1 p.m. Eastern. It's the highest level the dollar has been against the yen since February 26th of this year. Tonight, there will be trade data from New Zealand, a GDP estimate from the UK, and data on inflation, GDP, and current account out of Japan. Australia will also post its WMI consumer sentiment. Overnight, the UK posts its employment report, including its claimant count. It also releases trade balance data. Tomorrow morning, Canada unveils its new housing price index, while the US releases its beige book. And that wraps it up today in this day in the Forex markets. Join us again right here at cmsfx.com tomorrow, and happy trading.